are the measures of financial efficiency? Hello, I'm Rachel Jones, and this is Kalkine Media's educational series. Now, a company's financial analysis allows it to determine its current state, opportunities, and also problems. This valuable information is used both for making current management decisions and for strategy development. The analysis of financial performance is one of the methods for assessing the state of an enterprise and its capabilities in the future. It serves as a basis for strategic planning. It helps managers identify resources and areas of further development, and it finds strengths and weaknesses. Analysis of financial ratios is carried out to identify the best ways to achieve the company's objectives, such as increasing business activity, asset turnover, ensuring liquidity and financial stability, and also increasing the company's profitability. The analyst must understand a variety of figures from accounting and management reporting to be able to determine the effectiveness of the current activities. More than 200 ratios are used in financial analysis. They're all characterized by the four main sides of the company's activity, which are liquidity, that is, the company's ability to pay its obligations at the expense of current assets. The liquidity ratios allow to estimate it adequately. Next is asset turnover, which allows us to evaluate the effectiveness of asset and capital management of the enterprise. The basis for turnover calculation is revenue from sales of products or services. Its ratio to the average annual amount of assets, accounts receivable, and accounts payable. Next is profitability ratios, which reflect the degree of profitability of an enterprise. They're calculated as the ratio of profit to the indicator's value, profitability of which we find. The higher the values, the more effectively the resources are used. And lastly, there's market value, which makes it possible to conclude how the market assesses the efficiency of financial and economic activity of the company, the rationality of its dividend policy, and most importantly, its attractiveness for shareholders or investors. Now, they may differ depending upon the analysis objectives. To conduct an adequate analysis of the financial performance of an enterprise, it's necessary to ensure you should have a complete description of the company's financial activities for the period under analysis. Next, you can compare the ratios for different periods as well as with the average statistical values in the industry. Next, compare the values obtained with the recommended, considering the specifics of the company's economic activity. And finally, carry out the analysis of indicators as a whole. To get the objective picture, it's necessary to analyze the indicators of different groups: turnover, financial stability, and profitability. The competent analysis will allow to correctly build a development strategy, improve the concepts of asset management, and the attracted funds of the company. Now, if you did like this information, please like, share, and comment on this video, and don't forget to subscribe to our YouTube channel. You can also press the bell icon for notifications for our latest videos. I'm Rachel, signing off for Kalkine Media.